Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for January the 4th, 2012. Now, to get started, we've had another very choppy week, or a very choppy day, excuse me, in basically all the markets. The Fed again talking about QE3, attempting to deliberately weaken the US dollar. I'm not convinced that he's going to be successful this time around. My opinion is the market's getting a little smarter, and transparency is going to be an issue here. Now, we can see that I have this trend line, makeshift trend line drawn coming in down just above this 79 level. I talked about this in the Forex weekly outlook. Now, I would suggest that we're going to enter short here, even though we've got this triple EMA cross. Our predicted stochastic is hit an overbought level, predicted MACD. We can see, looking back over the last 3 months, 6 months actually, the market has struggled above this zero line to make a clean break of this zero line on the predicted MACD. So from here, we're not exactly overbought on the predicted differences yet, but when we look at the predicted stochastic, we can see when we've hit this kind of level, New Zealand US has sold off each time. Keeping with these monthly patterns of dollar strength, or seasonal patterns better yet, yearly seasonal patterns show strength in the dollar at the beginning of January, regardless of what it does February, March, April, and from then on. We usually have a couple of good strong weeks of dollar strength. So from here, what we're going to do is we're going to go into the daily report from Vantage Point, and we're going to fine tune this entry point. Very important that we don't fall prey to some of the things that are happening currently in the market. Now again, we're going to have a very choppy week, no question about it. Now for tomorrow, we can see the neural index is up. We really haven't had a lot of volume in the market for several weeks. So we need to allow our technical indicators to catch up to that. Looking at tomorrow, we can see we have a predicted high at 79.29, a low at 78.47. My opinion would be we're going to enter in short at the 79.29 level. Stops here are going to be we're going to put the stops over the 80 level to be safe, to stay out of that broker radar. I think that's very, very important. We can see that our predicted short, medium, and long-term differences are mildly overbought. So we have room to extend here, to say the least. But it's a question of what these equities are going to do. So for now, what we're going to do is continue to look to short the New Zealand US, and that in short means to buy US dollars. Now, that's our first trade for tonight. Now, in keeping with the theme of buying US dollars, a similar trade to that is the US Treasury bonds. What we're going to do here is I believe that they will recover, and the true signal was prior to today's market. So looking at the Treasury bonds, very shaky trade to say the least. We've closed here our key level, 143.19. We've closed at 143.03, so we've turned a little bit bearish here, but I believe that these will recover. Predicted MACD is showing a move to the downside. Our predicted true strength indicator, however, is flat, neither one of which is overbought. Predicted short, medium, and long-term differences sitting exactly on the zero line. So from here, what we're going to do is we're going to go into the daily report from Vantage Point and see if we can fine-tune this. We have 142.26, 143.20. Neural index is down. We've had 4 straight days up. That is certainly consistent. We would have a down day. We're going to use this down day to our advantage, and we're going to be looking to buy in this 142.26 area, and then we're going to target the 143.20. Now again, this trade is very, very similar to the New Zealand US trade, and just to be mindful of that. Now again, looking at the crossovers from Vantage Point here, we can see that our long-term crossover has been running flat for about 4 or 5 days now. This is a warning sign to me that we're working off an overbought condition, and that the dollar and the Treasury bonds will likely rally together. Now again, very high correlation to that New Zealand US trade. So with that said, these are the market positions for January the 4th, 2012. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.